Hey guys, what's going on? John here, coming at you with a investing video today. Today, at the time of this recording, it is March 9th. I usually wouldn't open with the actual date, but it's March 9th, 2021, and it's very important that I do a video for you today because we have some crazy stats on the date of March 9th. So what happened? What happened in March 9th of 2020? Well, in March 9th of 2020, what happened is the NASDAQ was down 2,000 points. That's right, almost 8% in one day. It was really the start of the of the stocks crashing, the stock market crashing in 2020 from the pandemic. And then what happened in 2009? Well, March 9th of 2009 was the bottom of the bear market, and that bear market had started actually in October, or at some October 2007, and then also on March 10th, not exactly March 9th, but just a day later, March 10th of 2021 years ago was the actual peak of the NASDAQ, back then during the dot-com days, and then after March 10th of 2020, of March 10th of 2000, it was about a year and a half of a stock market crash all the way until October of 2002. So what am I doing? So I'm watching, if you're watching this video on YouTube, I follow quite a lot of investors on YouTube, and basically I'm going to talk about somebody today. He is not even 30 years old, is my understanding. He is a real estate mogul, and he is very, very bullish on Tesla. My understanding is he's got more than $1 million of stock of Tesla. Who am I talking about? I'm talking about MeetKevin. So MeetKevin is very interesting because I follow him. He actually, at this point, has got about almost the same, maybe even more followers, subscribers than CNBC. I think he's got 1.44, MeetKevin does, on YouTube, and then CNBC's got 1.4. So any way you cut it, it's about the same amount of followers as CNBC, which is very, very impressive. In any case, what is interesting about MeetKevin is he seems to be kind of a hybrid, long-term investor as well as a trader as well, in terms of what he does with with some of his trading. He kind of pulls up Webull on his when he does his YouTube videos. But basically, my style is very different, right? I actually did do a lot of stock trading in the dot-com crash days, and certainly was trading stocks in the late 90s and having a great time doing it and making a bunch of money. When I see a lot of the younger folks these days, investing in all these different, stocks that my presumption is that it's kind of difficult to know everything about all these stocks that they're investing in. It does remind me somewhat of those days back then in the bull markets and stocks just going up and up and up and up and up and not really paying attention to really any numbers or any fundamentals. The way I see it is I'm not really a trader. I am interested certainly in doing some options pretty soon. I'm going to be, one of the stocks I like a lot is Roku, and I'm interested in doing some options in Roku, but I am not doing that yet. Got a very simple system that I do, everybody. And again, all of this is not to be considered as financial advice. It's really for entertainment purposes. But the system I do is as an investor, why not try to 5 or 10x your money, right? So basically, I look at a couple criteria. Number one is gross profit margin number. I try to find something when they've recently hit or about to hit $1 billion in sales. I try to find them at $20 billion market cap or less if possible. And then basically maybe year-over-year revenue growth. I don't necessarily have a percentage number of year-over-year revenue growth, but I do like to kind of stack a lot of the choices alongside of each other to see what the year-over-year revenue growth is in terms of looking at them in a peer group. So let's go ahead. So instead of going into MeetKevin's streams, which are, his videos are 30 minutes to almost 2 hours, each time now. It's, obviously a lot of time. What I'm going to do is I'm going to go into he's got a couple different links on his profile. And what he does is he's got an M1 investor pie. And he's got 21 stocks on his M1 investor pie. And then the other one says 10. It actually says 7 stocks on this profile description, but it really looks like it's 10 stocks. So I want to go into those, and I want to show you which ones of those that I like, that I follow, and then how they kind of align nicely with with what it is that I do. Just in case you're interested, I'll put a video here in the information tab up above. And what this is you can take a look at my performance from summer 2017 until really September of 2020, and I 3x'd, and that's 3-year time period, 3-year time frame, and I I 3x'd what the S&P 500 did. So these strategies actually work for me, and you don't have to kind of deal with all the trading. So let's take a look at what these stocks are real quick. Oh, real quick, before I go into the M1, the investor pie here, I wanted to also highlight something in terms of an article that's relevant to this particular video, which is the wealthy are investing like a market bubble is here, or at least near. So what this is a little article about people that are have a $1 million in cash assets, not necessarily cash, but liquid assets that they are investing in the markets, right? And 16% of those people think that we're fully in a bubble. 46% of those people think we're somewhat in a bubble, and 29% of those people think the market is approaching a bubble. So the reason that that's kind of relevant is because the markets have been really a lot of red days here. So today the stock, pretty much the entire market is very, very, very green today here on Tuesday, March 9th. Yesterday, Monday, it opened pretty well. In terms of being in green, but it closed pretty low, and then all last week it was pretty bad. So we're looking at a lot of red days in this, and really that last week of February, and then the first week of March that we had. But again, a lot of green today. So March is typically don't really exactly know why, other than corporate taxes on March 15th. But basically, March has traditionally been a very volatile month when you see like a lot of stock market highs, or you see like the top of the bull market, or the bottom of the bear market. So let's take a look at the investor pie here. So let's start with the most stocks. So here is this is MeetKevin's investor pie at M1 Finance. You got Tesla right there at the top. I'm not really going to talk about Tesla. I do own Tesla. I went in. I had some Tesla picked up in January 2020, and then I added to that position some during the year of 2020, and then certainly before they were added. They were actually not necessarily the announcement, but before they were added to the S&P 500. Etsy is a big one. Etsy is probably one of my favorite stocks over the next 5 years, right? There's a number of reasons behind that. I'm going to go into that in a spreadsheet here in a minute. And then some of these, it's kind of hard as a person to kind of evaluate every single opportunity that's out there, right? But some of here that I really that I do like, and I have, really two of them I'm going to highlight, but one of them I have made a very small investment in, and am bullish on it, and am looking to increase my exposure to it. And then one of them I have not yet, right? But of all these here, the ones that make the most sense to me, obviously Disney makes a lot of sense, especially from a reopening perspective, right? They're a nice hybrid in terms of what they're doing with their streaming, and then also their reopening. Shopify has actually fared very well over the last year, Anyway, I'm not going to be increasing my exposure to Shopify there. In my view, they're actually very overvalued. Amazon, Apple have plenty of that. But the ones that I like and I'm going to highlight here are Peloton and Pinterest. Square as well. I don't have Square yet, but I do have quite a bit of exposure to ARK Invest in Next Generation Internet, and then also ARK Innovation. And they've got plenty of Square in there, right? So what we're going to do is we're going to take a look today at Pinterest, and we're going to take a look at Peloton. So it looks to me like he's got 6% exposure to Pinterest in this top 20. And then he's got 6% again in Peloton. So if you go flip over to the 10 stocks, which he says is supposed to be 7, we have Pinterest at 9%, and then Peloton at 6%, and Peloton's the bottom one. So I'm going to focus on Peloton and Pinterest in terms of this particular video. I do have Etsy highlighted on my spreadsheet, but I'm not going to necessarily focus on it. So Peloton, I think, I've actually never done my workouts from home. ever since the pandemic? Well, you kind of have to, right? I'm here in California. I'm in Los Angeles, and I basically have to work out from home. I really don't have a choice. And I've got some interesting workouts. Number one, I ride a bike to my pool and go swimming. I've been able to swim the whole time during the pandemic, thank goodness. And then I ride my bike back. I live by the beach here. I've got these really great hills, so I ride up those hills. And then I also do a home workout. I do not currently have my own Peloton, but I do have several friends that have the Peloton, and they absolutely love it. There's a lot of things I love about the business of Peloton that I'm going to go into. And then also Pinterest. I do not have any sort of a position in Pinterest, but I have been meaning to take a look at them. What's interesting to me is Pinterest seems to have some really good growth. They're right there, just under $3 billion in sales, and it might be a very nice time to actually consider that. I will say I don't feel like I know enough about the Pinterest business just yet. Obviously, I know what they are. I use Pinterest. I save stuff, but I don't know enough about their business to really make an investment just yet. But we're going to take a look at them. Okay, so let's go ahead and hop into the spreadsheet real quick and take a look. So again, Etsy just checks all the boxes. Pretty much, they hit about they hit over $1 billion in revenue in 2020, right there at about 1.7 billion, and they've got 70% plus gross margins. They're they're valued very well from the gross profits into their market cap perspective. Their year-over-year revenue growth is the top on the list at over 100% year-over-year revenue growth. And then right now, at the time of this recording, just a tad over 20 billion in market cap. They are 26 billion market cap. Again, I don't really change the prices on the spreadsheet if you're looking at the prices, because obviously prices change literally like every second that the market's open. But revenues don't change every second. Gross profit doesn't change every second. Obviously market cap does, but and year-over-year revenue growth doesn't change every second, right? Those are very, very important fundamentals for a business. Certainly a growth business as well. Another thing I want to add about a growth business is that basically one of the reasons that I focus on gross profits so much is because, obviously in my view, it's really what one of the most important keys that makes a business agile, right? Things like, net income is certainly important, but a lot of the growth opportunities that I go after that I'm most interested in, a lot of them just don't have income yet, and that's okay because they're actually reinvesting in their business. But as a company grows and they get bigger, they go from 1 million to 2 million to 3 to 5 billion. Not million, I meant billion. 1 billion to 3 billion to 5 billion to 10 billion to more. I did this with Netflix, right? I got in Netflix at 3 billion in revenue. Then in 2020, they just basically announced that they hit 20 billion in revenue, and then in 2021 they're projecting to hit 25 billion in revenue. These are the great opportunities that you can ride up with technology, right? So. But that's a long time horizon, right? I mean, I started investing in Netflix in 2011, which was 10 years ago. I'm right there at about 70x return on that. And I really wish I never sold any of it, but that's not always realistic to do in life. But in any case, gross profits are again, in my view, very crucial to a business because it makes it agile, right? They can do all these different things that are under gross profits in terms of R&D and employees and all that stuff. You can kind of adjust that as your business grows and as your business changes. But really, that gross profit is very important because that's their product, right? That gross profit is their product. So let's take a look here. So anyway, so Etsy really checks all those boxes. I got another video I did where they did their earnings release somewhat recently. And then Pinterest right here, about a 42 billion, kind of a little bit high. They're basically, Pinterest right here at 33.8 billion, at 3 billion, almost 3 billion in sales. Basically 43.6% gross profits. That's pretty decent. Pretty decent, yeah. Their value is 26 gross profits into market cap. So pretty decent, in terms of the peer group, right there, pretty much right next to Etsy, right? And then 61% year-over-year revenue growth, which is actually very attractive. So from that perspective, it looks pretty attractive in terms of the recently, hitting 1 billion in sales, which looks like they did it. They did over 1 billion last year in revenue, but just a tad over it, right? So that's still pretty recent. Reasonable market cap. They're obviously above 20, but still reasonably valued and very good revenue, year-over-year revenue growth. And then, I'm sorry, that was Peloton. So Pinterest, 42 billion. uh, about 1.7 billion in sales, 48.16 year-over-year revenue growth, and then 48.94 gross profits. You know, market cap into gross profits is about 50, so pretty richly valued. Yeah, so I'm gonna have a hold on Pinterest, and I'm gonna watch them. But again, Peloton is pretty attractive. So again, I was talking about Peloton. Their sales really pretty high year over year. I did actually notice earlier in the year when I took a position in Peloton, they had a very attractive year over year revenue growth, and that makes sense because it's a high transaction value, right? When they're selling their, at least when somebody buys a bike, right, it's a high transaction value. They do have their subscription aspect of their business model, which is great, but still for a high transaction value. 43.6% gross profit is still, very attractive at 3 billion. So, 3 billion in sales, and then 30 billion in market cap. Anyway, so in highlighting Peloton, yeah, this is really the first time I've ever worked out from home. Haven't been in the gym for a year, which I can't believe. But anyway, so there you go. So from MeetKevin's Investor Pie, we've got the ones that I like are Peloton and Pinterest. Peloton, I do have a little bit of an exposure. I'm looking to increase my exposure to them, certainly as we go through March. And if there's going to be some red days, I'll be looking to increase that exposure with Peloton. And then Pinterest, I'm going to be watching it. So I don't know if you guys are trading or if you're investing. Again, I'm not necessarily a trader. I don't really trade at all. I'm more of an investor, and my system has worked well for me. I invested in Netflix back in 2011 when they were about a $3 billion market cap, and I've been able to watch them go from 3 billion in sales all the way up to what is projected to be 25 billion in sales in 2021. And the hunt is on for the next growth technology companies that are going to do that here. And in the process, maybe make 5 to 10x or more on your investment in doing that, okay? Hey, everybody, I've got a blueprint. I'm going to put the link below. I cover investing, of course. I cover online income. I also do a lot of different things. I've been an internet marketer for a very long time. I've generated over $20 million in sales online over a long period of time. And I cover credit. I cover business credit, financial independence, and I have a guide at the end. It's a 15-page guide. All the groups in the U.S. that offer free credit score, and then also all the groups in the U.S. that offer a free free FICO score and the corresponding bureau for that FICO. And yes, it covers all three bureaus: Experian, Equifax, and TransUnion, so you never have to pay for a FICO again. Okay, thanks a lot and have a great week.